Today's show is sponsored by Megaport. Are you looking for an easier way to connect all your clouds that you're using? With Megaport's Network as a Service platform, you can spin up private connectivity to as many clouds as you want, anywhere in the world in minutes, not months. All the world's top cloud service providers, such as AWS, Azure, Google, are already on the network and at your fingertips. And it's all software defined, no hardware necessary. Just point, click, and connect. So if you're looking for a way to improve network performance and security, lower cloud cost, and turn up hybrid cloud and multi-cloud connections quickly and easily, Megaport is the cloud connectivity solution for you. Learn more at megaport.com. That's megaport.com. Reimagine connectivity.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well. Another Sunday Perspective show. And, it's been about a month since VMware was spun out, finally officially spun out from Dell Corporation back into its own public company. And, it's been about a, 5-6 year journey from when Dell originally acquired EMC, which included acquiring companies like VMware and Pivotal and some others, VirtuStream and some others. And, I thought it'd be interesting to sort of look back and see, what did we learn? What did we learn from these 5 or 6 years? And not just necessarily completely dig into this. There's been lots of sort of postmortems of what's happened over the last few years and so forth. But, we always like to kind of dive into, what happens trends-wise. Are there things that we can learn from these types of acquisitions? Are there things that we can learn when we see consolidation in the market? And, especially when we see, big things happen in the market, are there things that we can learn from that? So I want to dive into that a little bit, dive into, what happened to VMware? How did VMware grow? Did they grow? Were there lessons that could be learned here? Were there good things that happened? Were there mistakes that happened? And I think we're going to try and dive into more of that, kind of look at it from a few different perspectives right after the break. Today's show is brought to you by CBT Nuggets. You know how much we value ongoing education on the Cloudcast. And CBT Nuggets is exactly what Aaron and I wish we had when we were trying to get our certification early in our careers. CBT Nuggets is all about bringing a personalized touch to learning about cloud computing, virtualization, networking, DevOps, and much, much more. Whether it's their hands-on labs with personalized coaching or the online chat functions that come up with every instructor-led course, CBT Nuggets' team of experts is always there to help you get the most from your training and your path to certification. You can check it all out at cbtnuggets.com/cloudcast and sign up for a free trial. You get access to the full catalog of great training, including virtual labs, quizzes, and other premium features completely free for the first 7 days. That's cbtnuggets.com/cloudcast. And we're back. And as I mentioned at the top of the show, I want to dive a little bit into some of the lessons that we learned, what the industry learned, and kind of what have been the ramifications of really the largest tech acquisition that ever happened, which was back in 2015, finalized in 2016. Dell made an offer of $67 billion for EMC, which, as I mentioned at the top of the hour, included companies like VMware, it included Pivotal. I believe at the time it included VirtuStream as well, although that may have happened right afterwards. So a lot of different companies were part of the EMC umbrella. $67 billion was the price tag for this acquisition. And I thought what we would do is sort of look at, why did this acquisition happen in the first place? What were the motivations? What sort of happened near term? What happened longer term? And how did we ultimately get to a point where Dell decided that they needed to spin VMware back out as a public company all on their own? So let's kind of go through this a little bit historically. So 2015, Dell is about 2 years into having gone from being a public company to having taken themselves off of the public market and gone private. Michael Dell has structured financially the ability to basically buy back the company, took on a lot of debt, and took the company back private in working with a number of private equity companies. Now, they were trying to rebuild themselves. They were trying to rebuild their image as being more than just a PC company. The mobile market had exploded at that time. The iPhone launched in 2007, so we were 5-6 years into the iPhone being a phenomenon, Mac being back as one of the most prevalent desktop or laptop devices. And so Dell was sort of in a tough spot. The server market was still big, but the cloud market, AWS and others had reached more than $1 billion in revenue. And people were like, well, the Dells of the world aren't going to sell to the cloud provider. So, you sort of looked at Dell and you said, well, server provider, that's great. They do very well in servers. They were still about a $50 billion company in 2015 around the time, $50 billion in revenue around the time that this happened. But it was, it was servers, it was laptops, it was, desktops, it was some other things. They had their own storage line. They OEM'd quite a bit of stuff from networking companies and other things. But, they really weren't in the limelight back in the way they were in the early 2000s. So they were trying to remake themselves. There was a certain amount of consolidation of the enterprise market that Michael Dell was trying to take on. He wanted to bring together, people were really beginning to look at AWS and Azure and others and saying, boy, they have, all sorts of services from infrastructure to applications to databases to other things, lots of regions around the world. I can buy a lot of things from them. And so he was trying to make a huge move to consolidate a lot of buying capabilities portfolio under one umbrella, and that was going to become the Dell Technologies umbrella. And so at the time, huge acquisition, had to go through about a year of scrutiny in order to get finalized. So it was announced in 2015, finalized in 2016. And if we kind of look at where the world was at that point in time, like I mentioned, VMware at the time was about a $6 billion company. EMC was about a $25 billion in revenue company. Dell was about a $50 billion, but market cap wise, just in terms of the value of their companies, Dell had to take on a tremendous amount of debt, about $50 billion in debt, if I recall right, and I can go back and look at the number. So they took on a massive amount of debt to take on this deal. But what they had at the time, on paper at least, was the ability under one company umbrella to offer their customers everything from desktops to enterprise technologies, infrastructure, security, application services through Pivotal, some cloud capabilities through VirtuStream. They had some capabilities that Dell also owned, like Boomi and some other capabilities. Services that could come from people like EMC. They had lots of technology partners that they worked with through VMware and so forth. So a really, really broad, at least what people might call an old guard or an enterprise sort of on-prem software and hardware-centric portfolio at the time. If we look at it, around the time, like I said, the stock was around $70 a share. It fluctuated a little bit at the time. And so, you had this company, and from an enterprise perspective, it concerned a lot of different companies that were out there. How will Dell continue to partner? How will they allow VMware to partner? How will they allow Dell to partner with other storage companies, network companies, and other things? So a lot of your expected concerns that came along about, how will this shake itself out? Now, what was interesting is if you really think about it at the time, they were doing this partially to consolidate the enterprise market, which made a lot of sense because there was still a ton of buying that was happening on premises with hardware and software, even though the cloud providers were growing like crazy. And by 2016, 2017, they were into the multiple billions of dollars of revenue and, 100% growth, 80% growth. And so the question was, are they doing this to have an alternative competitor to an Amazon, for example, or are they doing this really to consolidate the ability to buy for the enterprise customers who are going to be on premises, which is still a very, very large amount of purchase, and that gave them the ability to do things like raise prices and other types of things. So there was always this trade-off in the Dell-VMware, Dell Technologies thing of, is this really there to compete against Amazon and the cloud providers, or is this there to kind of consolidate cash flow within the enterprise and hopefully, in the case of Dell, pay back this massive debt loan that they had, this debt service that they had to take care of and so forth. And I think if we really think about what happened, if we look at it purely from a numbers perspective, in terms of winners and losers in this thing as we get to where we are in 2021, on one hand, if you look at it purely financially, Dell and especially Michael Dell made out very, very well. They heavily leveraged the debt in this situation. They've been able to take the cash flow from all those businesses, EMCs, partially VMware as their still continue to be partial ownership of that. Dell, they've grown their server market share. So they have been able to pay down that debt. On the second hand, VMware's shares, got up as high as $200, roughly $200 and some odd dollars. Are back down to about $120, give or take, here around the 1st of December, 2021. So they were able to grow that stock price, roughly 66%, or let's call it 11% year over year, which isn't huge, but it's not terrible returns. I mean, it's obviously much less than, an Amazon or Google or any of the FANG companies have been doing, but it's been, reasonable in terms of technology returns. They've been able to grow revenues. So, Dell's revenues, so let's say they were $50 billion at the time of the acquisition, 2016. EMC's were $25 billion. You sort of put those two together. So they were basically starting around $75 billion. They've since grown their revenues to $94 billion. So they've been able to drive that increased revenue, over the last 5-6 years. It's not been huge growth numbers, but again, single digit to double digit growth. VMware has, like I mentioned, they've grown from $6 billion in revenue to nearly $12 billion in revenue. So VMware has seen about doubling of their business over the last 6 years. And they really haven't restricted VMware from being able to grow. They've done 26 acquisitions from 2016 to 2021. So, to a certain extent, you look at this and you go, well, the enterprise market as a whole, especially hardware and software, isn't growing nearly as fast as the cloud business, but it is still there is still healthy revenue to be gained there. There is profitability to be gained there, and the Dell acquisition in that time frame did create positive not only shareholder growth and so forth, but revenue growth. And so from that perspective, you sort of check those boxes and you go, yeah, Michael Dell made money as an individual investor in working with Silver Lake and some others, private equity. Dell grew, VMware grew. They consolidated all of the EMC's business under the Dell umbrella and so forth. And so from that perspective, it's been a positive. The other thing is, VMware went from, having their own cloud, VMware Cloud back in 2013, 2014 days. That sort of went away. But they launched the VMware on AWS offering in 2016. And between that offering, which is roughly about $1 billion business at this point, and the business that they do in selling VMware, mostly virtualization software through cloud providers, that business is around $3 billion, maybe just a little more than $3 billion. But if you really think about, so there have been some positive things. On the negative side, purely technology side, Pivotal didn't really pan out. When IPO, that was a positive, but after the IPO, the stock price, other than an initial pop, never really took off. They acquired VirtuStream to sort of get them into kind of enterprise-y cloud, SAP type of cloud. That business is more or less sort of fizzled out. I think there's still some remnants of it around, but it's it hasn't taken off for the $1 billion price they paid for that. So there's been some technology hit and misses, especially under the EMC umbrella. But I think the biggest miss people will go back and look at is, this was answering if we answer that question. If the question was, could we grow the enterprise business, consolidate the enterprise business, I think the answer to that is yes. We could grow it at about the rate at which it's growing, maybe slightly bigger, like I said, between 8 and 12 to 15%. Okay, if that was the goal, great. That probably wasn't the goal necessarily, the primary goal at a $67 billion price tag. Now, granted, the cost of money over the last 5 to 6 years has been extremely inexpensive, 4% interest rates. So money has been very inexpensive. So they were able to do this and finance it at very, very low rates. So maybe that was acceptable. But I think the other side of the coin was this done to try and create, a consolidated alternative to AWS or to Azure or to GCP. And I think to a certain extent, Dell and VMware would probably tell you, well, we don't necessarily look at them as competitors. We look at them as partners and so forth. But the reality is they're customers, just like every customer who has an option between hardware and software and cloud is saying, which one of these things do I buy? Where do I invest? they voted with their dollars. And, as we've seen that, just between the big three has become a 120 plus billion dollar market growing at 30 to 40% year over year, right? Over the last 5, 6, 7 years. So in that instance, did this acquisition create something that was going to change the mind of companies who had that option between buying hardware and software in the sort of traditional enterprise way and buying from the cloud? And I think the distinct answer to that is no, right? Now, while VMware has grown, some amount of sort of SaaS-like business to roughly $3 billion over the last 5 or 6 years, it's still not taken the completeness of those resources that were pulled together and really create anything that was going to be disruptive to them. And I think, as I think back upon, kind of what the last 5 or 6 years look like, if you're sort of got a scorecard, from a financial engineering perspective, this has probably been an A+, an A+ by Michael Dell to get himself, get his company grown, almost double in size, take care of a lot of their debt, consolidate a lot of things. So that's probably an A+ for him. For Dell, the company, yeah, it's been okay. They're back as a public company. We'll see where their stock goes. They're sort of back as a buyable public thing after again having gone private in 2013. They did saddle VMware with a lot of debt, about $7 to $10 billion in debt as they left. VMware had to take a bunch of their cash and transfer it over to Dell. So they left VMware with a lot of debt, as often happens in these debt-driven, debt-centric acquisitions. We've seen over the years. But I think, the biggest sort of legacy of this is, if the goal of this was financial engineering or to, consolidate and grow at basically the market rate, okay, you get an A or a B+ or an A- or something. But if the goal of this in a bigger picture perspective was to create a significant alternative to the big three, to create a different way for the enterprise customers, which is still, the largest part of the market, and even the on-prem stuff is larger than what's in the cloud, but it's it's beginning to sort of normalize. I think the grade for that is not great. It's probably a C or below, D. Right. Some may say it failed in terms of, when you look purely at the amount that it grew and how much it had involved with that. So, I think as we look back on it, I think Michael Dell got out of it what he wanted to. We didn't see a lot of people stay, at least in terms of pure leadership. A lot of the EMC leadership left. There are still a few people, the folks that run sales, the folks that run services for Dell Technologies, Dell EMC are still there, former EMC people, lots of Dell people still there. VMware has gone through a lot of churn. Pat Gelsinger obviously has left and gone to Intel. We've seen a number of VMware leaders leave and go to other places. And we've seen, some struggles even for VMware to move beyond being infrastructure centric, right? We mentioned Pivotal. We don't need to kind of keep harping on the Pivotal piece of it, but they never really moved up the stack into applications, never really moved into different delivery models of beyond cloud, at least at any significant level to where the industry talks about them as over the last 6, 7 years with the massive amount of resources they had and the massive amount of attention they had to really move the needle. And I think that's, what we sort of look back on, is going to be maybe the black mark, the black eye of this deal, largest deal in technology industry. And unfortunately, what happens in these really, really large deals, and there have been many, many over the years, they're difficult, right? They're often done late in the cycle. They're often done as, kind of a huge catch-up. Oftentimes, again, they saddled some teams and some companies with a lot of debt. So, I think as we look back on VMware now being public, basically they are still a software company for the most part. They're the last sort of great proprietary software company. They're trying to expand into some new places, open source and some developer things and a little bit of cloud stuff. But, they're sort of back where they were, right? The company that could have been so much bigger, so much more influential beyond just the enterprise virtualization. They're kind of back to where they were. Dell is Dell, right? We think of them as the server company and the laptop company, but we don't think of them as really anything different than that. And everything else, okay, EMC's gone. But beyond that, I think we don't think about what happened here as really anything more than a lot of financial engineering and some amount of growth, but nothing that was really that special, in the bigger picture of things, something that really changed the market. So that's sort of a disappointing aspect of something that was such a moonshot and it had maybe so much potential at the time in 2015 and 2016. So with that, I think there were some lessons we learned. I think there were some things that we saw repeated in terms of historical context, and there was probably some opportunities that were missed. And obviously, for people that lived inside of VMware or lived inside of EMC or Dell or Virtustream or Pivotal, there's probably lots of stories that could be told of what could have been done better. But, I think we'll look back on this as, more of a financial engineering feat than a, technology innovation, market changing thing. And that is what it is. But it's always good to look back on these significant situations within our industry, look back on them from a time perspective, look back on them from a timing perspective. And again, they may not have impacted you, but they're good to have as historical context for the next, situation that happens in our industry and maybe how people will react to it. So with that, I'm going to wrap up. Thanks to you all for listening. As always, the Sunday Perspectives, we always get great feedback. We're getting close towards the end of the year. There'll be a couple of more shows, industry, interviews and Sunday Perspectives. We're going to have a few wrap-up shows. We're going to do an AWS recap, reInvent show. We're going to do some year-end shows and prediction shows. So, December is always kind of wrapping up, kind of being thankful, spending some time with family. There will be shows every Wednesday and Sunday, except for the very last one of the year. And hope everybody's doing well with that. And then we'll get into 2022. Wow, 2022. We are almost there, 1 month away. So thank you all for listening. Thanks for telling a friend. Thanks for helping us grow the show. We'll have some numbers that we'll publish in the end of the year show, but it's been a really good year. So thank you to everybody. And with that, I'll wrap up and we'll talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.